the end of the last video, I said that we would move on to disposals, but there's just one more thing I want to look at quickly related to amortization again. In those first examples we did, we were looking at a full year of amortization, but it happens more often than not that a business buys a piece of PP&E partway through a year. So it's not like every January 1st they buy all of these assets they need. No, they just wait until the time comes and they buy them as needed. And for that reason, we need to know how to record amortization for these partial years. So you typically will do this based on a month, a full month of amortization. But again, it's not like a business buys that asset at the first of the month. So companies will develop their own policy of how they calculate amortization for a partial year. And the example that we are going to use in our course is to look at the day of the month. So we're always going to do it based on the number of months, but we'll either record a full month or not at all. We're not going to go based on the days. So if you purchase the asset on or before the 15th of the month, so from the 1st to the 15th, we're going to count that as a full month. So if you bought something on January 10th, that's before the 15th. So we would count January as a month of ownership and record amortization for that month. If something is purchased after the 15th of the month, we don't count that as a month, and therefore you would record no amortization for that month. So basically, as we're doing this, you calculate amortization expense for a full year, but then we're prorating it based on the time that we have it. So how many months have we owned that during the year? Or if you record amortization every single month, you would calculate it for a full year, but then divide it by 12 to know the monthly amount that you record each month. So quick example here. A business with a year end of December 31st purchases a building for $600,000 on April 4th, 2020. The estimated life is 18 years, with a residual value estimated at $60,000. The company uses the straight line amortization method for amortization. So they're purchasing this April 4th, 2020. And the question says, what would be the amortization expense for 2020 itself? So they're using straight line. So first we'll calculate what the amortization is for a whole year, and then we'll figure out for this partial year of 2020. So straight line amortization for a year, what's the formula to calculate this? Well, we take the cost minus that estimated residual value, and we divide this by the estimated useful life. So for our example, the cost is $600,000 minus the residual value of $60,000, as we see there. And the estimated useful life is 18 years. So $540,000 divided by 18 years gets us $30,000. But this is per year. So for a whole year, if we own this, we would record $30,000. But in 2020, we purchased this on April 4th. So first, we need to decide, does April count as a month of ownership? And on this previous slide, I said if it was bought on or before the 15th, which the 4th is before that, we're going to record a full month. So yes, if it's on April 4th, we count April as a month. So how many months in 2020 did this business own the building? So April, May, June, July, August, September, October, November, December. If you count that out on your hands like I was, that's 9 months. So now we take this yearly amount and we times it by 9 out of 12. And that gets us to 22,500 that we would record in 2020. So these 9 months are April to December. Now, what would you record in 2021? How much amortization? That's where you go back to, and now in 2021, we have a full year, assuming this isn't sold or disposed of. So if we have that full, or the building for the full year, we would record the full 30,000 in 2021. So again, be careful when you're doing something like this. You have to record multiple years, that you only use this partial year dollar value in that first year. Beyond that, use the full year amount. Now it says below here that partial amortization is computed and calculated under the declining or diminishing balance method in the same way. So you would go and you'd calculate a full year of amortization, which we know under declining balance, you take the carrying value and times by that diminishing or declining rate that we calculate. And then you would now get that amount and times it by this factor of time. What about units of production? Do you think we need to prorate the units of production amortization? No, you don't have to worry about that factor of time, because units of production is already based on the actual amount of units that we are producing or kilometers driven, so on. So that's already based on that shorter period of time. So you do not prorate units of production based on time. I'm just going to say UOP, units of production for partial years. Because when we're calculating units of production amortization, we're not using the number of years. We're using the estimated units of production over its life. So therefore, we don't have to prorate when it's a partial year, because we're not basing our calculation on that anyways. Okay, so that's the end of amortization. Next, we will look at disposing assets and how those are recorded.